Hi, folks. Welcome to the Weekend Investing Daily Bite of 24th September. Markets really not doing much, actually slipping, but the hope is there that Piyush Goyal and our foreign minister, Mr. Jaishankar, are in the US. They are holding talks, and hopefully, some negotiation will happen. That is the sort of current hope that one can ascribe it to. The markets are completely dull. There is absolutely no interest to go up right now. Commodities are running hard. Very surprisingly, PSU banks are running very hard as well. PSU banking index is near a new all-time high. So there are pockets of green shoots within the market. Autos have been recently as well, but overall it's a lethargic sort of a move that is happening in the market. Perhaps waiting for some clarity, some confirmation about this tariff business, and in addition to this, about the H1B IT uh, impact on IT services. Disclaimer as always, please read it fully, do understand it, and then move forward in the video. And do try to subscribe to the channel. Let's see with some charts. So, fifth day in a row, markets showing some red. There is some perceptible weakness now in the last 2 days, especially. It was holding on, but it doesn't seem to be, reverting back post noon. That which was the case, 3 days or earlier. So there is a sense of uh, some disappointment in the market building up. 0.45% on Nifty. Nifty Junior was where the big cracks happened, minus 1.2% down on Nifty Junior. So big cracks there. Mid caps also losing 0.88%. So this resistance that we had in June, July, August seems to have played out again. 0.88% down on mid caps, and small caps also down 0.55%. So no place to hide really in the markets. Nifty Bank also down 0.7% despite PSU banks trying to pull it up. So uh, there was pretty much red all over the place. Gold also um, stagnating today at 0.01%, but gold has gone up so much in the last 1 month that even a 5% fall probably will not be surprising. And it is currently trading at its all-time high at 11,384 per gram. Advanced decline trends, you can see after the first couple of hours, it just became like a flat line and then sort of declined in the last hour. The declining stocks also flatlined but increased towards the end. So predominantly the declines have won the day at 363 declines to 137 advances. And you can see the reason why. The Nifty heat map is predominantly red. Autos that had been running very hard also profit booking today. Private banks all down. Some PSU banks also down. Uh, Adani stocks that were running also getting hit. IT stocks continue to bleed. Uh, Reliance, Bharti, L&T plus 0.4%, but Reliance, Bharti moving down. Some loss in ITC also, Ultra Semco. So a lot of stocks which were losing ground. And Nifty Next 50 was even more full of this. Adani Power losing a whopping 11% today. Adani Green down 3%. Adani Ensol. So big sales in Adani happening. DLF down 3.3%, Motherson down 3.6%. I think what is playing out is what we were discussing 5 or 6 sessions ago, that rate cuts are seen to be good for equity markets, but the reality is that post rate cuts, markets actually come off. And that's probably what's happening here. TVS Motors also down, HAL, Swiggy, Divi's Lab, all down. Pidilite was up today at plus 2% post its split or bonus. And Canara Bank also managed a small gain along with Bank of Baroda. If they see the mover of the day, you can see Adani Power, which had leapt up from 125 to nearly 180 post split, has tanked completely at it's climbed down from 180 plus to 144. So big volatile movement happening in Adani Power. Policy Bazaar also coming off sharply but recovered towards the end of the day, as IRDAI is advising insurers to reduce commissions and distribution costs, and that caused a flutter in policy bazaar. Sectoral trends mostly red, minor gains in FMCG and central PSE stocks, but largely things were sitting in losses, and real estate took most of the brunt today at 2.4% negative. Capital markets continue to reel. There were more news, I wouldn't say news, but rumors that SEBI is likely to get rid of the weekly expiries. 1.4% gone there. Defense also coming off 1.1%. Autos, after a great month, are down 1.15%. If you see on a monthly basis, autos did 6.6% in the last 1 month, and metals did 7.3%. So autos also coming off. Energy, private banks, media, all down less than 1%. Here you can see how the real estate stocks have virtually collapsed back and are probably going to retest this bottom again. Godrej Properties, DLF, Phoenix Mills, Oberoi, Luda, all the top developers losing ground there. In the tweet of the day section, this was a funny tweet. This is about the circular market cap game that is happening. So Oracle invested 100 billion dollars in Nvidia, which wants to invest 100 billion in OpenAI, and OpenAI wants to invest 100 billion in Oracle. So nobody really loses any money. The money goes around, uh, and everybody's market cap is up a few $100 billion, if not more, because of this. So this is a very classical case of the marketplace not recognizing this circular movement of promises. And uh, you know there will come a time, perhaps maybe not right now, but maybe a bit later, where this kind of circular movement will get discounted, because this is over a very long period of time. This $100 billion of investments are over a very long period of time, and the graphic here shows the infinite loop that gets created in this kind of scenario. So just thought that was a bit funny. Are REITs better than reality index? And I'll also add, is REITs or reality index better than real estate? That will be the question for our discussion at 8 p.m. Watch this episode at 8 p.m. today. Do like and share these videos, and do follow our channel for more of this kind of videos. Thank you. Bye bye.